Hey everyone, it's Evan here from the Trade Risk on Friday, October 27th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Now notice in today's video, you can see my face. I do have a live stream video component up in this format, in this video. I'm trying something new. I got a whole new kind of setup and arrangement here as well, which I'm not sure I like or am comfortable with yet. I got the mic kind of right in front of me, but then I have the keyboard kind of right behind that, and I feel like at any moment during this video I might just topple this whole thing over when I reach to type, so that may happen. And there we go, hitting the mic already, so we'll see how this plays out. But I think at the very least, this gets me to put on a clean shirt, gets me out of the shadows, so I'm not just sitting behind my desk trading stocks all day and not really cleaning myself up at all. So we'll see how it goes. May alternate every other time, but hopefully the audio quality stays good. That's what I want. And obviously, if you can see the chart and I don't get in the way of it myself in the bottom left, then it's a win-win. So let's jump into markets here with the S&P 500, the SPY ETF, and you can see today a strong close to finish out the week, up 82 basis points here on Friday, but it wasn't clear sailing throughout the entire week. We did see some volatility. We did see support get demonstrated here by the bulls right around this 254 level, which I think will be an important area going forward. We did see some good volume come in this week. So if we put this all together, we look at the weekly chart first. You can see here, after all was said and done, we only finished up 23 basis points here in the SPY ETF. So I know the end of the week was sort of a very exciting move to the upside, but for the S&P 500, it just put us back into green territory. And take a look at the range that we made throughout this week. We retested last week's lows. We undercut them just a little bit, but it did hold. We did bounce, and we closed higher to finish out the week. And again, on some pretty good volume. So this trend on the weekly chart still very much intact here. 8 and 20 period moving average, both still supporting price. Nice bullish alignment there. If we go down back to the daily chart, you can see here we are closing back above Monday's highs, where we kind of gapped up and then failed immediately and didn't quite engulf, but certainly closed near the lows of the session to start the week off. We closed back above that level at new all-time highs. So going forward here, looking at the S&P 500, we do have this 254 and a quarter level that we made lows from on Wednesday of this week will be important. That's also the lows here from the 19th, and there's some prior sort of supply and chop in here from earlier in October. So that's a good sort of raise the bar up kind of trailing stop and potentially measure your risk against, and just sort of a short to intermediate term line in the sand here for the bulls. Again, looking at trend momentum here, building back to the upside now, basically, 1 to 2% dips. That's what we're getting in this market. That's still the buyable level, and we still don't have anything materializing beyond that. It's still very much kind of a complacent market and just that slow grind higher here, despite, again, some brief volatility that we saw earlier in the week. So the S&P 500 bulls very firmly back in control. If we go to the small caps next, excuse me, you can see here we did again close out the week strong. We did see some volatility to start the beginning of the week here. This was Monday on this candle right here. So we kind of opened up. Those were the highs of the day, sold off. Then we saw this kind of range expansion lower on Wednesday, which did lead to a reversal back above the 20, and we did close the week higher. So the IWM now has certainly put in a kind of reasonable consolidation here, given the fast, sharp move it had throughout August and September. So this is certainly a place to pay attention to next week. If you're looking for small caps to lead us higher, to continue to lead, we're going to want to pay attention to this consolidation here, this 150 level. If we start to break out here and make a second leg higher, that could be significant here for the market, particularly into year end, when we start to get the seasonally bullish kind of light volume trading that occurs. So pay attention to the IWM. It was down on the week. It did finish down, mostly flat on the week, but down 13 bips here. And you can see again on the weekly chart above all rising moving averages, and it's now cooled off about 3 or so weeks. moving sideways. And again, note the volume here on Friday. So that's the Russell 2000, but the real story is the Nasdaq 100. This took this really was the entire show here on Friday. A huge gap up. We had north of 25% of the Qs reporting on Thursday evenings. We had Amazon, Google, Microsoft. I'm sure there are others that I am missing, but those come to the top of my head, and they all had pretty much extraordinary beats to the upside. Certainly the reaction was extraordinary. We saw a huge amount of market cap sort of accomplished there just across those three stocks, and that really helped to sort of fuel this Q's rally to new all-time highs, completely leaving behind the prior all-time highs here from at 149 and on significant volume. We can see here that throughout the beginning or intra-week, we did again experience that volatility. We came all the way down and retested this 146 level. This is the 146.50 level. This is the significant level that I was paying attention to, as it represented the highs here and resistance from September. We came all the way down, we retested it almost perfectly, and again, we kind of went into earnings on the weak side and probably shaking out kind of the fearful sort of weak longs there. We had that upside surprise. Plenty of fuel, plenty of catalyst here to move us to the upside, squeeze those shorts, and of course, after digesting 5 or 6 days, we are off to the races here to new highs. So very strong on Friday. This basically pulled everything up. Breadth collectively was not that impressive on Friday. It actually was fairly marginal to the upside because we had just these massive market cap leaders like the Amazon, Google, $500 billion companies that are really kind of pulling everything else up. I've hit the mic like 4 times in the past 30 seconds. So that's, back to breadth now as I lose my train of thought. Not that impressive on Friday, but still, I mean, you got to respect this strength here. Look at the volume to new highs. Really tough to want to fight this right now. Could this be some type of blow off top? Sure, but for now, lots of momentum, new highs. The S&P 500, the IWM especially, has now consolidated enough that it could start to take the rotational lead. And there are some individual sectors that we're going to talk about later in this video that are looking sort of ready to potentially lead us higher as well. So lots to potentially chew on into next week. We still have plenty of earnings that are going to be out, but for now, new all-time closing highs in the Qs. The Dow still held up there. Russell 2000s put in that consolidation, might be ready to go again. And the S&P 500 basically right back to those old highs. So with that, let's get into some of the other major markets. We'll go to TLT first, which had a nice session here on Friday as well. For the week, it was still lower, but it is holding on to this 123 level. This is a pretty significant level. If we kind of zoom out here and we go all the way back to December of last year, you can see that this has been either a resistance while price was below it, and it's acted as support while price has been above it. So this 123 level is still kind of representing a very significant level. We have seen price come back down and retest it. It's still in a vulnerable spot, but it is holding for now. So it's something to pay attention to. TLT is at an inflection area. Let's see how that acts heading into next week. For now, just paying attention to it and watching it just as a spectator, not interested in putting on a trade there. Uso Oil had a rip to the upside here on Friday, 2.5%. If we look at the weekly chart here on the USO ETF, you can see up 4% on the week collectively. The volume was pretty light, but it is starting to really leave behind some of that old supply that it's been trading in for basically the past 2 or so months, right around this 1050 level in the ETF. So bulls really kind of clearing, accelerating to the upside, generating some momentum here, putting on a squeeze, whatever, however you want to think about it. But USO clearly getting a lift here to the upside. That's a constructive development. And going forward, if we can stay above this 1030, maybe even 1050 now, you could sort of cheat that up as that kind of upper level support that we basically broke out of on Friday. That's going to keep you in the most bullish scenario. So USO looking pretty good there for the bulls. Next, if we go to natural gas, it's basically the exact opposite. it was basically, oil's gains or natural gas's losses here on Friday. You could see down 2.5% to new closing lows for the year, below 6.25. Good volume coming in. We did rally off of the lows of the session ultimately, but still a very poor and weak looking candle. It's been consolidating sideways in this range of about 50 cents here for the ETF. It's a new closing low. That's something that doesn't look so healthy to, for some type of bullish setup. So I think it's an avoid or a short at this point. If we start to reclaim 6.25 back above 650, those types of levels, then I will call this, then I will sort of change my analysis here. But basically, as it stands now, we got a new trend developing, got some volume upticking. So I think you got to be careful. It could be a washout, but it's something that I would not want to touch to the long side, at least just not yet. If we go to the metals next, we did see GLD rally here on Friday. For the week, though, it was down 58 basis points, so basically 0.5%, but it is retesting the lows and the level here from the beginning of October, and so far it is holding right around that 120 and quarter level, and we did again see that a bit of a reaction here on Friday. Bulls still have more to prove here. I think this is an important area to hold for gold. If we start to break below these lows from the beginning of October, then it's kind of the same, this downtrend and maybe a potential second leg lower. If you think about this maybe as your first leg down that started in September all the way to basically October, the very, very beginning of it. If we take this off here and we think of that as our first leg down, and then we had this nice little retracement, and then we start to move down for a second leg, that's a potential there if we start to break below this 120 level. So something to pay attention to heading into next week. Silver, though, getting a little more of a meaningful reversal here. It has been holding up just a little bit better than gold over the past week or two. You can see it's not quite down below retesting these levels from the beginning of October. It got pretty close, but it's trying to hold up here. Again, a decent volume coming in on Friday. So something to pay attention to. Kind of same exact story as we just discussed on gold. So keep those thoughts in mind if you're looking to play either of the metals. And I think that's it. I think that's all we have for other major markets. If we go to some of the sector analysis, got to start off with the XLY, this discretionary ETF breaking out above $92. And you can thank Amazon for that, because Amazon does represent about 15% of the XLY consumer discretionary ETF. So those gains that we saw in Amazon after hours and today's session is really helped fuel this, getting this breakout going to the upside. And if we go to the weekly chart, take a look at just how nicely this consolidation looks. It's basically been moving sideways here since June of this year, from $92 all the way down to $87, so about a 5 or so point range. Very healthy and reasonable sort of consolidation that it's been moving through over the past several months, or 6 months, 5 months. And you can see just now starting to get back to the upside. So looks pretty constructive there for the XLY, something you want to pay attention to. XLK also really fueling to the upside off of the heels of last night's earnings. Good volume coming in. We get this big gap and go today. So this trend, which was already kind of stretched and moving to the upside, is really just accelerating here. So again, does it give you some of the thoughts of, could this be some type of exuberance blow off that we're coming into? Maybe. But again, I don't think I need to say too much more. If that's something you want to see, let's wait for some price reversals and some volume to come through to the opposite side, to the reversal, to the downside. But for now, I think you just have to respect the fact that we are sort of moving higher here. Again, I don't think you need to be all in on the market or these sectors specifically, at risk of going off on a tangent here. But I think, again, you just need to sort of respect that this is a freshly sort of squeezed market here for the XLK. I think for you tactical traders, if you're interested in fading this, use today's lows. If we start to lose this quickly next week and we start to just fall right back into that gap, maybe this is some type of blow-off move here. But until you get more evidence there, it's going to be really difficult to sort of fight that, and looking for, grasping at sort of indicators to try and fight that. Semiconductors, basically equally as strong here, kind of a strong trend that is kind of accelerating higher. Volume didn't get too frothy here on Friday, but again, you can see this weekly chart. We're over $100 now on the SMH ETF, and you can see well above the latest breakout level of about $90 back in early September. Finally, IBB and XBI. So really got hammered basically all of this week. You could see IBB down 4.5%. We saw some big losers there after reporting earnings in the biotech ETF. The IBB certainly messy here. You can see this was a short-term support level here, or at least a prior pivot low from early September, right around this 328. We cut right through it. We fell, didn't quite get down to 300, but we got fairly close. So you can see here, we're still in this kind of upward channel. If you were to draw this kind of going up from basically the 2017 lows to where we are today, it is holding on to that sort of channel of support, but it still looks like, in the daily chart, it is in a tough spot. It does look quite messy here. Probably ripe for some reversion, especially given today's reversal, kind of holding right at Thursday's lows, closing strong on the day. So maybe we get an early bounce into next week, fill this gap, maybe up to some of these fast-moving averages to 325, maybe all the way up to 330. But then that's really where the test is going to be as it starts to rally back up to this old resistance here. So if you're tactical, you're looking for something, I think the IBB might be good for a couple of days bounce, but see if it can get anything more than that. I personally like the XBI a bit more. In fact, we put a position on here in the XBI on Friday. Very similar kind of trade. It is something that really kind of washed out and sold off for a couple of weeks on fairly high volume, which is a little concerning, but today it had a good reversal, closing back above $83. I like that potential there. The weekly chart looking a little more intact here, a little more strength kind of coming up here in the equal weighted biotech ETF XBI. So we are long the XBI, looking for a trade back up to around this 86 level as maybe a first target, and then we'll sort of reassess from there. But it has pulled off for a couple of weeks. See if we can get a couple of days pops out of XBI. And then finally, actually two more, XLE. So XLE, I think we should still continue to pay attention to. Remember, this had this brilliant move higher throughout September, really kind of bucking the downtrend that it was in for about 10 or so months. It topped out around $69, $68, went sideways, kind of rolled over, but then put in a pretty good looking reversal day today. You could see good volume coming in, closing on the top kind of third quadrant of today's intraday range. So a decent potential reversal here. Let's see if that materializes into next week. But I think if you're looking to buy the dip here in XLE, something to pay attention to with today's action. And then on the downside, just to show one kind of loser here sector that's really just not really gaining any traction, is XLP, as it now convincingly breaks below this 53.70 level and starts to make new lows. So that's what I had to cover in today's video. Hopefully you guys had a good week trading, and apologies if this format here doesn't publish out in good quality, if sound or if something's lost here, then I'll quickly try and fix it. But we'll see if we stay with the new format. Have a good weekend. Thanks so much for watching. If you're new here, do subscribe to our YouTube channel. Keeps you up to date with all the latest videos. Thanks again, and talk to you in the next video.